I wanted to take a little time to discuss how we can trade some ETFs. I've been doing some research. You can set up a Roth IRA for someone that is young as my daughter or one of your kids or something such as that, if they work for you. Right? You don't have to have like you don't have to run them through paychecks or something like that, but they do have to work for you. So my daughter is learning the markets because one of my goals was to start teaching her at 5. So she's learning through some flashcards and she's learning through a Roth IRA that we set up for her because she works for us. She's doing some modeling for us and so forth. And you've probably seen some of the videos that we're doing on YouTube of adding kind of clips of her and so forth.
Please subscribe to our channel. Have fun trading and manage your risk.
I was looking at these ETFs to try to be able to buy some shares in her Roth IRA for. And because the landscape of buying shares have changed dramatically since I started being a part of these markets back in the early 90s. You had to pay for shares. So buying one share of something was silly. It just didn't make a lot of sense because you had to pay, $10 or something or whatever it was, for um, just in commissions. And now though, the game has changed that if you wanted to buy one share or something that's not a standard lot is 100 shares, then you can do that and you can slowly build up the shares until you get to a standard lot, if that's the direction you want to go. But it's no commissions to buy a share anymore, right? It's and a lot of times it's even no fees, no exchange fees. So it does not make a lot of sense anymore not to buy stuff that's that you consider super conservative, that has almost a 0% chance of going out of business, and that also pays a dividend. So if you have something that just say trading at $50 and you buy one share and it gives you a a dividend of $2 a year or whatever, I'm just throwing out a number. Well, that's pretty awesome, right? You just made some money off your one share. Someone just it's this book out there that's called um, the richest man in Babylon. It's one of my favorite books, and I'm sure you guys have potentially read it. I'm going to be recommending that even though it's not really a trading book, it's more of like a financial book. But it talks. One of the things I think about in my head every time when I'm you know uh, buying shares or something is just how you can you can have your money work for you and it continuously works for you, right? So your coins makes more coins and those coins make more coins and so forth, right? That compounding concept. And it can be pretty powerful, how this works out. But if you can have 100 shares, right? And it's no reason we shouldn't be buying individual shares if we don't have enough to do that standard lot. I mean, if we can, then you can also incorporate options on that, those type of strategies, that can make it super safe. And we, as you guys know, here in the Dorian Way, we call it the safeguard strategy. So you have a diversified portfolio and you're making it more safe by incorporating options to your strategies, right? Or to your long-term um, outlook. Now, let's jump into some really quickly. First one I want to take a look at is this here. This is the Vanguard Total Stock Market Index, right? So this right here is trying to cover the whole market. Okay, it's trying to cover the whole market, and so you can get some information on this stuff about this is 1 day performance. You can look at 1 year performance, 5 years performance, and so forth, right? And this is the overall market. Obviously, you guys know the overall market has done well over the last the last 5 years. But if we go here and we just take this look at a 1 year chart, you can see that this Vanguard Totals, market index is actually followed the market recently. It's had a good it's had a good little run here, just like Apple and Tesla and the S&P 500 and so forth. Um, and this right here, it pays a dividend. It's not huge, but it's a dividend nevertheless, right? A 1.7% dividend, and that's paid out quarterly. A lot of ETFs, or some popular ETFs out there, um, don't pay a dividend or do it semi-annually. So this is a quarterly one. So this is one that if you only had $208 basically, right? And you put it to work, well, you're going to make 93 cents on that every quarter. Okay, every quarter, almost $4 you're going to get on that 207. Yeah, this is just under 2% for the year, but that's your money, growing for you. Okay? um, Instead of just putting it into a piggy bank, as I tell my daughter. So if we go over here and we bring this up and we break this down based on a kind of a trade, right? If we had some shares, if you had 100 shares of this and you wanted to kind of make some money, it's not a lot of options, no weekly and so forth. But if you wanted to make some money off this and you had 100 shares, well, this is one of the things you can do really quickly. You can jump into this and do a covered call. But instead of doing a covered call, you can take some of these monies from the covered call, even though you want to keep this, you're okay with keeping this. You can take some of this monies, which is about 215, is the mid, and you can say, okay, I'm going to buy this 197 for example purposes. And so if it jumps up in the next 42 days and it goes above, it expires above the 215, you can make $750, right? If it drops below 197, the most you can lose in the next 42 days is 1045. Someone else is going to have, risk all the way to zero because they do not have this put. We call this a collar strategy. You can collect some money. So if it does nothing, you're still going to make some money, but you're betting that this is going to go up within the next 42 days. This is the collar strategy. You're minimizing your upside, but this is a good upside in the 42 days, and you're limiting your downside, which is really important in a market that's been going up as much as it has, as we just indicated. Okay? All right, so that's one of the strategies that can be done. All right, so the next one I want to talk about, this is the Vanguard Real Estate Index. This is another ETF, and you can see if we go out 5 years ago, this has obviously done well. Real estate has done well in our country. But this is trading absolute dollar wise a lot cheaper, right? So now you can get 2 shares of this one. So if we go here and we look at the 1 year chart on this one, VNQ, and you can see that this has been following it's just like the one we just saw, to kind of follow that market and so forth. But if we go here and we look at the dividend on this one's hot, right? This one's percentage wise 5% dividend, right? So if you own, this is paid out quarterly, so you're going to get over $4 of money. Your money going to grow. If you bought just one share, once again, that one share is going to go to, that $91 is going to go just by sitting there. If it just sat there, if it didn't go down or whatever, it's going to go up at least to about $95, right? A little over $95 just by sitting there. And that's a 5% increase. That's pretty awesome, right? So if you were going here and you were going to do a strategy with this, right? Because you just say you had a standard lot. Once again, let's look at the 14 days on this one. So if you're going to do a strategy on this one, that goes to bail everyone. The market came back just a little bit. You can do a covered call, right? You're okay with owning these shares and so forth. You can do it at the money. That's going to give you $187 potentially if this continues to go up in the next 14 days, or you get the extrinsic of 159. If you didn't want to do that, you want to go up a little bit more, you can go to this 93 strike, right? And that's going to give you $230 in the next 14 days. And then you have this extrinsic that is giving you a 108 to do this covered call. If you're not in the trade already, you can start to get in this. If you had enough monies to own the 100 shares, you can sell the at the money put if you wanted to be able to get into it, or you can do the collar if you wanted to get into the shares, right? The collar that we just showed, or you can do the iron or the covered call that we just showed, right? If you think it's going to shoot up a lot more over the next 14 days or over a period, you can do a Bionic Bull, which is something like this, right? A Bionic Bull, you want to get a credit. This is a small credit, but the Bionic Bull, as you guys heard us talk about, this is a trade that gives you unlimited potential to the upside, at least theoretically, right? So that was that one. Let's go over a couple of quick ones really quickly, everyone. We got the Vanguard Total International Stock Index. So we had the total U.S. stock market, right? Now we have the international stock market. So this is diversifying you. First one was total market. Second one was real estate. This was international stock ETF, right? So this is pretty hot. Look at the 5-year chart. You can tell that that's done well over the last 5 years. We go back over here and we look at we go back to this chart here, and this is VXUS, and this is done really well, right, over the last several months, and so this, but it still pays you a little dividend here, 4.4% dividend, right? So you're getting almost 63 cents every quarter. So once again, this can be a really good stock for to diversify your portfolio. If we went out and did something a little further out, in this case, once again, you can do the covered call, you can do the collar, and you can do the Bionic Bull. And in this case, if you did the in the money naked put, right, you can collect about a 147. If you can get that mid with a cost basis of 54.53, it's trading at almost 56. So this can be a nice little trade to be able to get into this if you are interested in trading this. I know that's 77 days to go though. All right, so now we jump back over here, and when I want to look at two more really quickly. This is the Schwab U.S. Dividend Equity ETF. So this is one that's just focusing on dividend paying stocks and so forth. And this is trading at at about $77 a share. All of these are based on getting dividends if it didn't do anything, and if you were looking to kind of have this conservative process that you want to again incorporate options to your conservative long-term process. So this was a nice one as well. And then and if we go and look at the dividend here, I just want to point out this dividend on this one, and this is here, and this dividend is 3.3%. So not 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 bad. It's the dividend right there, 3.3%, and then that's about 70 cents a quarter, right? So not bad. Now, if we go to this last one here really quickly, and this last one is the Vanguard Information Technology Index. So we just diversified quite a lot, right? If the market goes down, most of these things are going to go down, just like the market has been going up, and these things have been going up, right? So you're diversified, but it's the market follows the market for the most part, right? So but they might go in the same direction, but they're going to go in the same direction at different percentages. So keep that in mind. This one's a little bit more expensive. The most expensive one we looked at dollar wise per share, but it's a technology one, right? So this is, you can see this here, and not last year was bad, but this has been really strong. And if we go into the dividend one, you can see that it's paying. This is the lowest one. Is about taking a lot of technology stocks or growth stocks that don't pay a lot of dividends, but this is a little less than 1%, but still a dividend nevertheless. And then the last one I want to look at is a bond one, right? So we've really been diversified with these ETF. The ETF is diversified, and you're diversified by the ETFs that you're using, right? And it's almost a 0% chance these ETFs can go to zero. So we look at these bonds over the last 5 years, they haven't did great, right? Over the last 1 year, they haven't did great. Year to date, they're a little better, but this is being diversified, right? Sometimes these bonds are not going to do well. but maybe the market might not do well and the bonds, do well. Last year they both did poorly, right? Bonds and the overall market, but sometimes that happens. All right, but if we go over here and we throw this into here for this dividend, and we go into BND and we look at this, and you can see this bond yield is 2.8%. So all of these are giving some dividend. This right here is really nice because it's giving you 17 cents every month, everyone. This is the only one that's monthly that we looked at this point. It's some other dividends ETFs that do that because they're like REIT in ETFs and so forth. They'll do monthly, but this is monthly, so which is nice, right? This is one of those things you can get your, if you're interested, you can get your kids are young, or even if they're teenagers, right? That's super young. You can get them into this and see how their money moves, how their money works, and how it's so much better than the bank to kind of see your money grow, right? So anyway, that's what I wanted to talk about with these 6 different ETFs that you can use as a conservative strategy and be able to diversify and then incorporate options with it.